Welcome to another edition of Momentum Monday. Today is, what is it, September 22nd.
How's the weather?
Weather's warm, 78. How was your birthday?
Good. Are you coming to Oktoberfest?
Yes, I'll be here.
All right.
Oktoberfest is coming to me, right? So
I got to be in San Diego finally next week. All right, let's get right to the markets. Start her off.
all right, let me share my screen. And we're looking at a chart of the S&P 500. Let me pull this down. I mean, the big cap indices are still consolidating near all-time highs, above their 20-day, above their 50-day. So given the plethora of bad news lately and intraday volatility and shakeouts, I think the indices are holding pretty well. Typically at the beginning of a new bull market or of a new leg higher, we tend to see individual stocks break out ahead of the indices. So the indices are kind of lagging. Mm-hmm. And the main thing that kind of make me suspicious of this potential bull market is that I'm not seeing that many new stocks breaking out from proper basis and following through so far. Maybe that'll change, but so far I'm not seeing that. We're seeing strength in like cyclical sectors like home builders, which there's still no growth there. We're seeing some bounces in beaten down sectors like energy and financials. But there's not a lot of new leadership. I mean, there's the occasional medical devices or.
Yeah, we'll go through what's working, but I agree with you. Go to the weekly here. See, we're kind of pretty interesting because pretty much like 18 months in a range. And if we look at some of the leading stocks, so if we look at Shopify now, it's in a confirmed, series.
They just had a secondary at what, a 317, so that's where they closed.
They're offering secondaries. So you can see these are like, these were due. These companies are trading at crazy valuation. I'm long Shopify and I've kind of been selling on the way up, but I'm not ready to buy any back here. And you can see the 200-day moving average is still 100 points down. The stock would still be in a major uptrend, but you can see the markets are churning at highs with stocks like this starting to break their short-term trends. You look at Roku, and so you got to kind of know what you own. Like I look at Roku and I was mad at myself for missing it, but I never really understood the product. And you can see it's gone from 170 to 100
in 2 weeks. Yeah.
So you can see that, and again, I don't know much about the company. I don't use the product. It seems very competitive with Apple TV and with now Facebook launched a product, and Comcast launched a product, and the iPhone is kind of a competitive product. It's a TV box. So you can see a lot of momentum names. You've got that. You've got the IPO market. If you look at the ticker symbol for IPOs, it's just the IPO market's a mess. So the classic momentum leadership is not there. But at the same time, if we look at like Chevron or JP Morgan, all-time highs, or right there, JP Morgan, all-time highs.
All-time highs, yeah.
I think Chevron is actually near an all-time. CVX. I was looking at some, and a lot of the defense. So that stock, even though with oil cut in half or, a third of where it was a few years, 5 years ago, Chevron continues to do well. So it's kind of like a fuddy-duddy kind of dream. Drug stocks, some old retail bouncing, everybody's.
Gold and gold miners are kind of doing well, considering, look at the Friday's close.
Yeah, gold. So there's a little bit of something for everybody. For me, it's just kind of a rotationary tape. So you've got to really kind of know what you own. There's a lot of shakeouts going on. And in the big cap tech, what was interesting is FANG is Netflix, the war for content is on. Netflix, I think, might have made a mistake and kind of said that it's going to get tougher. A lot of people are stepping up to buy it here. It's the only 8 to 80 name I don't own. Haven't owned it for a while, but I kind of want to own it, but I don't know where relative strength of 13. They're losing some of their pricing power, I think, with so many services coming online. They had pricing power for years because they were the only game in town. And now that you've got to get Hulu and HBO and YouTube, and YouTube TV is $50, it starts adding up pretty seriously for people. And now there's subscriptions.
They don't have pricing power anymore.
No, I think they've lost their. I think that's what people are getting wrong right now about Netflix. I'm super bullish on Netflix. I say that by not owning it right now, but I'm super bullish. But with no pricing power and a lot of noise in the industry, it's going to be hard to grow.
Yeah, and I think their only play right now is getting into the game streaming. That's their only catalyst.
Ooh.
Netflix.
Yeah, but Apple's, I think if you're going to go into the only company right now that it's got pricing power is Apple, and it's kind of weird pricing power. They've lowered, if we pull up Apple, they lowered the price of their new phone. And I think people are going to be super surprised by, I saw the stores this week and I went in to get a watch and a new phone. It was too lined up for even me to care. So I think I'll have to wait a month to get it. And I want to bet the watch, and I want to get the new phone because I want that camera. I mean, I don't give a shit about the phone anymore. I mean, the camera is the product, and the 3 lenses. I'm hearing great reviews, and they're the only ones that have pricing power. In the sense that they can lower pricing and build a bigger moat. And the phone is basically a retail storefront and also your wallet. So I think we're starting to see the conglomerates kind of take back control. Microsoft, Apple, Amazon, probably, and even Facebook. They're the ones holding on the best. Netflix, because it doesn't have pricing power right now, is the weakest of the FANG stocks. Facebook's still hanging in there. So that's why the indexes are all-time high. They're not going to, you haven't made any money in them for 18 months. I think Google looks the strongest, but it also has been the weakest performance-wise the last 5-6 years. But, as everybody, so Netflix may be dropping out of the FANGs because of the price war. So that's something to keep an eye on. And let's go to some stuff that's working. What do you see that's working?
I mean, I see some select setups in various sectors. For example, in medical.
Yeah, it's all medical
devices. Let me open the daily chart. With this one here, earnings gap is being consolidating through time. Edwards Life Sciences, EW.
Yeah,
it's with a strong market. I think if it clears 221, we might see another leg higher, at least testing 230. Yeah. On a short-term perspective. Another one in this, I think in the same field, again medical devices, Qterra, CUTR.
Laser and minimally invasive aesthetic. Okay, that's interesting. What's the monthly look like on that?
Big earnings gap, and now it's back above its 20-day after a pullback. Mm-hmm. The monthly, it is choppy, so it's not for really long-term investors, and I'm talking from a swing trade perspective.
Yeah, that looks pretty interesting. Okay, keep going. Zimmer looks interesting. I saw Zimmer Holdings, ZBH maybe. Yeah.
Yes, setting up near
implants, reconstructive, surgical products. So it's that. I think it's IHI, which is the medical device, which I added to the 8 to 80 list.
Yes, I mean the ETF itself is near all-time highs.
This is one that could continue to lead, but again, it's had a fantastic 5-6 year run. Okay.
Yeah. So last week we saw some interesting breakouts. This one in Alibaba, And of course, the news that came on Friday that the Chinese delegation did not come to the US to, I don't know, to visit some farms. I mean, I highly doubt that there will be anything this year. So I think if you play any Chinese stocks, they have to be trades.
The two that make the most sense to me probably are Baba, just because it is the internet market and they have the payments business with the Alipay, and they're pretty much in every corner of the market, including delivery of food. You know, anything that the US has one company doing, you know, Alibaba's kind of the conglomerate for. And then the other one I hear great things about continually from people in China is Momo, which is kind of their Tinder.
Huh, interesting.
And I don't own it, but it's just one that, you know, from my friends that are in Asia, they said dating, you know, it's pretty free. Everybody's out there dating and using this product. So definitely doesn't look as good as the American version, which is Match.
It needs to clear 40 for me to really.
Yeah, so that's one I'm watching. I mean, I'm not really actively looking at China. I'm just kind of figure out where the next set of money flows. How does our list look like?
Yeah.
I think the interesting news on Twitter was Disney was out this weekend and Barron saying he was explaining why he turned down the deal, Bob Iger.
Yeah. So right now we have Alibaba, Twitter, Snapchat.
Yeah, I own Twitter. I own Elastic. I own some Snap right now. I put on a trade. So at least I'm in the right, at least in terms of
this one is interesting. Ascent, you can see mortgage insurance. We start seeing some interesting action there. Look at this breakout from a long base. And let's see, this is a weekly. So that's technically that's a strong breakout. It's a different question.
No one's ever heard of it. I like those too. I mean, it's earning, you know, it's trading at 10 times.
And then what was the other company in that field? I think this one. It's still setting up.
Okay. So there is stuff working.
There is some stuff working. It is some still market of stocks.
It's not a sexy tape right now, which is fine.
Last week we saw some, like, the last standing leaders getting crushed, and you know, Carvana's another one that is right now kind of under pressure. They lose that 50-day. They can probably go back to their pre-earnings levels. I think the only other one, the momentum leader, is kind of holding well, is Shake Shack.
You eat there? I just don't love the product.
I don't really eat there. Like
Pack though. I mean, they're doing a great job with their locations and airports. They're kind of becoming the high-end McDonald's, and they're just doing a great job.
Their valuation is still insane, but they're growing so quickly that it doesn't matter yet to the market.
Well, they can open hundreds of stores. How many stores do they have? 208 only. That could be 1,000 stores, no problem. So that's, as long as they can continue, you know, if they literally could be 1,000 stores. So dips will get bought there. If you see that in the 80s, probably a buy. Anything above that breakout, but I'm not going to chase it. McDonald's is in a pullback. I mean,
yes, I mean, it's not really looking good from a short-term perspective here.
Not looking good. I definitely would be buying it on bigger dips in my 8 to 80 list. Chipotle's and
even Visa and MasterCard are not looking healthy. If they lose that loss from last week, I mean, that's their flag. Basically, they can test. MasterCard can test 250.
You see how it goes from looking great to looking bad pretty quickly, and that's just how trends work. Yeah. And when they finally end, you don't get many warnings to get out. So I think you just have to kind of pick your spots on new ideas.
Yeah, and look at the Semiconductors index, SMH. It was setting up near all-time highs. Big down day on Friday. Testing its 20-day exponential moving average. But that's an important sector to hold for the bull thesis to remain intact. And if you look at stocks like AMD, it is not, I mean, if it loses that level here, 29.50, 29, it can easily test its 200-day near 27. The same with Nvidia.
Yeah.
Give you back its gains. So I think it's really interesting to see which sectors will lead the market higher. I mean, we pointed out that medical devices, there are some interesting setups in medical devices, but that's a very tiny sector to be really a
defense too, I think, has done well.
Oh yeah, for sure. I mean, that's why the markets are holding new all-time highs because of the FANGs. Microsoft tried to break out to new all-time highs last week.
No, but the defense industry, I don't know what the ticker is, but
defense.
Like Lockheed Martin.
LMT, let's see.
All these stuff.
They've been doing really well over the past few years, and they're kind of hovering near all-time highs. It'll be interesting if we see a comeback in this one, AeroVironment, AVAV, which they had a big earnings here gap, and then they followed through after the gap, but they're still below their declining 200-day. But that's one of the, I think, defense.
It's a drone company. Okay.
Drone company, yeah.
All right. Yeah. So I don't see anything to get super excited about. I think you're in kind of a wait and see mode. I've been really quiet the last few weeks, last few months even. It's just, you just kind of can feel that there's no real direction. I think with the WeWork.
Yeah, there's nothing exciting on the long side. There've been the occasional blow-ups on the short side, with former momentum leaders breaking down. I think it will be very interesting to see if the software names stop the bleeding and try to build new bases in the next few weeks.
Yeah, TTD, they're right there at the 200-day. AYX, all our former leaders just kind of got wiped out. Zendesk.
I wouldn't say wiped out, but they had a substantial pullback and shakeout. So it will be interesting to see. I really don't see a scenario how the major market averages will could continue higher and those stocks will keep going down. But anything's possible. I don't really see that happening. So I'm keeping an eye on
and these companies are not broken, so they can regain their footing and the markets could really take off. So you just got to kind of have some ammunition ready. Yeah, this is one that everybody had been ready to get up, and now it looks great again. So that's how quickly the markets can turn. Companies that are in the right businesses, which is e-commerce, the right software, are going to be hard to take down, below their 200 days for any extended period of time, especially with the rates at 2%. So I think you got to keep some powder dry, and here rates, starting to plummet again. It's been pretty volatile in the rate market. Okay. All right, Ivan, I'm going to cut it off there. I think we've got a pretty good feel for the tape based on this. I think it's going to be an interesting week. Historically, this is the worst week of the year, isn't it?
Yes, it is. So it will be interesting.
A long period of time. So, but come the end of September, things generally get a little better.
Typically, markets do well, don't do well on this Oktoberfest week. So we'll see if the tradition will hold.
Yeah, and then you've got a CES. You've got a lot of technology events coming. You've got Christmas season. So if we can get through these next, 3-4 weeks without too much damage, I think seasonally, last year was terrible, but seasonally, historically, this has been a pretty good time to start looking at stocks to get long. So we'll end it there. Have a great week. I'll see you in a few days.